Welcome to Friday's market wrap-up here at Wealth Creation Investing. Matthew Buckley, the Chief Investment Strategist and CEO at Top Gun Options. And it was just kind of a wallowing around week. Instead of like the previous weeks having that Seinfeld rally on Monday, Tuesday about nothing, market taking a break on Wednesday, starting to roll over a little on Thursday, and then giving it all back on Friday, we've seen just flat this week. We saw out of the gate on Monday, Tuesday, the market down, a little bit of recovery, then the market down again. And we really are just stuck wallowing around here. The Dow essentially flat, the S&P 500 flat as I'm recording this. However, I think we might see a little selling pressure as the day goes on. On Sunday is the Ukraine vote. Eastern Ukraine is going to obviously vote to secede or leave Ukraine and join Russia. Even though Vlad the other day said, well, I agree that we should postpone the vote. And the Russian separatists in the East said, no, we're still going to vote. And he's like, oh darn, I guess I'll have to listen to those people. Duh. This kabuki theater would be comical if it wasn't so serious. And he's actually in Crimea today for a victory day. So here comes Adolf Hitler, taking a look at Poland or the Sudetenland that he just quote liberated, to cheering ethnic quote Russians. Just insert Germans into that phrase. It really is just mind-boggling to me, folks, that this is going on, and the boiled frogs here in the United States and Europe just sit here and watch as he turns up the heat. The JOLTS jobs opening number, not too good. More importantly, look at wholesale inventories. Wholesale inventories came out looking for 0.5%, 1.1%. What's that mean? That's bad, okay? So when inventories rise, okay, so businesses don't like having a lot of stuff on their shelf if they can't sell it. That's a lot of slack. Ultimately, businesses want to be perfect, right? They want to have the right amount on the shelf to delivery, constant, just the right amount of stuff, whatever they're selling, in stock, and not have too much. Well, they got too much, okay? So being up 1.1% in March, smashed expectations for the third month in a row. And remember, this is rearward looking. So again, this is a Q1 number. So not only did Q1 GDP suck, and we're seeing a bunch of other numbers from Q1 that have come out that have sucked, the revisions to Q1 are going to be very, very interesting. It's obviously negative. We talked about the only reason Q1 GDP was positive was mandatory government spending over Obamacare, which is obviously a laugh. So stand by for revisions to Q1 going down, and obviously Q2 revisions being most likely adjusted. Obviously, all the weather people are out there saying Q2 is going to be great just because the weather's great and everything's happy. Stand by. We'll see. Very interesting that Apple is doing the whole Beats deal. The stock's down a little bit. I think, the market's saying, well, there goes $3.2 billion that he's not going to be able to use in buying back stocks. So the stock's down about $4 right now. I sold as it went through 600. We did some great trades in our weekly options model portfolio for the past couple weeks after earnings, after the dividend, and after the bond announcement. So we've been trading Apple really, really well here in our weekly options program. And we have a bear call spread closing today for a gain, 100% gain of about $1,800, call it $1,200. So nice $1,200 gain on Apple. And I have an SPX Iron Condor on that's right now between, if the S&P finishes between 1865 and 1875 today, that's a $3,400 gain. So potentially $4,600 gain this week in our weekly options model portfolio on limited risk, okay, on about $12,000, $13,000 in risk. That is a nice, 30%, 40%, can't do public math, gain in 1 week in our weekly options model portfolio. So if you're interested in checking out what we do here, trading weekly options, go to topgunoptions.com/weekly-options and take a test flight, man. Just get in here and take a test flight, and you can and get access to our weekly options model portfolio. Last thing I want to cover, the Russell. I told you at the beginning of the week, folks, if you go watch my Monday Market Outlook, that if the Russell broke this 200-day moving average, look out below. This is a big canary in the coal mine, folks, that the Russell has broken its 200-day moving average. That's the small cap 2000, the Russell 2000 small cap index. This is a ominous sign, folks. And if we don't hold this level, this 1090-ish level, done. And it's interesting because the Nasdaq's getting pummeled, but the S&P, the Dow, all these guys are racing to the upside. Dow's up nearly 1% for the year. The Russell's down about 4%. So who cares that the stodgy stocks on the Dow are doing well? I care about 2,000 companies on the Russell. The real breath of America is rolling over here. So watch this canary in the coal mine as it drops dead. And if it continues, if we don't hit it with some defibrillators and wake this thing up, the Russell, look out below. And this might be the big one, Elizabeth. Okay, so I got to run. Have a great weekend. Happy hunting. Make sure you hedge. And I'll be back with Monday's market outlook here at Wealth Creation Investing. We'll see you.